In this video, I'm going to be teaching you the structural liquidity that has allowed me to take high probability setup, a good risk to reward, and also I'll be starting from knowing what is a structural liquidity, the best time to use structural liquidity, and more importantly, at the end of this video, I'm going to be sharing with you a personal experience that has helped me to overcome my losing streaks and helped me to stay on track during my losing streak. So make sure to watch to the very end of this video. Without much talk, let me get into the analysis. Firstly, we will need to understand what is a structural liquidity. A structural liquidity is a situation whereby you have another block, then market created a break of structure above that your other block. So here is a picture of what a structural liquidity is. You have your other block here, then the market have this pullback before actually creating a break of structure above your other block. Now your expectation is that the market should come down to sweep this liquidity and then tap into this available order block before actually going in the market direction. So we are expecting the market to come down to this available order block. This is simply what a structural liquidity is. This break of structure elbow is the liquidity to the other block below. So here we have your break of structure elbow, which is the liquidity, and then over here you have your break, you have your other block. You have your other block inside this box, while you have your liquidity, which is the break of structure elbow, the first pullback before the market actually broke structure. Have your break of structure. So this is purely what a structural liquidity is. I'm going to show you on the live chart, and I'll also show you the trades that I've took with this same example. So let me show you the trade that I took today, the one I took yesterday, and one is currently running now on Nasdaq. Now, firstly, before you even start to analyze the market, you need to know the market direction. And if you know Nasdaq very well, you will understand that Nasdaq is mostly a trending market. Now, this structure liquidity work on any market, but just make sure that you are trading with the actual market direction. So, as soon as Nasdaq, as soon as the market came down, it swept this liquidity. It went up to actually take out this, to actually give us a major change of character. Now, after the major change of character, I went down to the 5-minute time frame. Now, in the 5-minute time frame, just like the picture I drew for you on what a structural liquidity is, you can see that we have this available order block. The market pull back. Let me use this thing. We have this available order block. The market gave us a major change of character. It pulled back, which is the break of structure elbow, and then the market broke structure. Now, according to our expectation from what a structural liquidity is that we are expecting the market to tap into the available order block below, sweeping this first pullback before the actual break of structure. But the market came down, it swept liquidity, gave us another break of structure before actually coming down to this available order block and then going in its direction. So you see that it's exactly what a structural liquidity is and exactly what I explained to you guys that is a structural liquidity. For the next trade, you can also observe that it's exactly the same thing. We have our recent high, which is this order block, okay, because the market firstly changed character here before changing character at this up here. So we have our minor change of character and our major change of character. So that area is an area of order block because that is the lowest place, which is the first place the market actually change character. So if I go down to the 1 minute time frame, we are going to see it more clearly. Okay, this is the second trade. Okay, right here. So you can see that this is our minor change of character. Now after our minor change of character, we have a pullback here at this level. I'm analyzing it in the 1 minute time frame now. So you see you can use any minute time frame, the 5 minutes or any minute time frame at all. We have our first pullback, which is the break of structure elbow. Now after our first pullback, the market went up to actually broke structure at this level. Now I'm going to go back to the 5 minutes time frame so that you see everything more clearly again. Now after this first pullback, which is the liquidity now, the break of structure elbow, the market went up and actually broke structure again, which is this middle one here. Let me write break of structure BOS. Now before the break of structure, the market pulled down, giving us a liquidity elbow, a break of structure elbow. Then before the market actually move to the upside. Now, as the market has given us a new break of structure, just according to what we said earlier, what we are expecting the market to do is to come take out this pullback before actually moving up, right? So the next unmitigated level is actually this available order block. So you can see that before the break of structure, we have an available order block. The market broke structure, gave us a break of structure pullback before actually coming back to tap into this order block and then going up. So similar thing is what we have here also. We have our order block. The market broke structure, but before the break of structure, the market pulled back to give us a liquidity, which is inducement. The market broke structure. Now our expectation is for the market to come back to this available order block before actually moving in the market trend. And that is exactly what the market did. Came down, tap into this other block, and then it's moving in our predicted trend. Now also I have this trade running. This one is currently running on my MetaTrader 5. So it's just exactly this one is what I'm observing next, but let me start analysis with this one. So this one is just exactly the same. We have our order block here, which is the minor break of structure, right? Now after the minor break of structure, this is what we are. After the minor break of structure, market went up. It came down to give us this pullback. Then it broke structure. Now, just exactly as the rest ones, what we're expecting is for the market to come sweep out this pullback, tap into this available order block before moving in the actual market direction. So you see that it's really I will not say it's really simple, because before I get to observe this thing, I've practiced it over and over again. So you get to understand it. The more you practice it, the more you will understand it. And more importantly, the best time to use the structural liquidity is with the market trend. So let me just give you guys some tips here. The best time to use structural liquidity is to follow the trend. Just follow the trend. Follow the market trend. Always follow the market trend. You can start your analysis. Let me say you can go to 4 hour just to look at the market direction. Then you can come down to your 30 minutes, 15 minutes, 5 minutes, any time frame at all you want to take the trade on, as long as you already know your market trend. Now you can see that this trade is moving aggressively to my take profit. So it's just exactly the same. You followed the market trend, make sure you are following the market trend. And more importantly, practice over time, backtest it over time, backtest. Because even if I go to backtest, let's say backtest, you backtest it. Backtesting is very, very important, because even if I go to other areas in this trade, you will also see exactly the same thing. Exactly the same thing is what you see. Exactly the same thing. Okay, let's start the analysis from here. For example, analysis from here. We have our break of structure here, right? Now, before the break of structure, you have pullback. Then the market went up again. You have pullback here. Market went up, broke structure, gave us an inducement. But remember that there's an available order block below. Give us an inducement. Let me see, the market went up all the way to the side. It came down to tap into this available order block, because this level here, because this pullback is acting as an inducement to that order block. So you see the whole thing now. So what you are simply looking for some of you who might have forget, is that you have one here, you have your order block at this level. I'm waiting for an inducement, then break of structure, and you're expecting the market to come back to this unmitigated order block, then actually move in your predicted direction. So this is what you are looking for. You have your, you can see now, like, this is a live trade on Nasdaq and it's currently running in profits. I will try and put the screenshots in this on the screen so you get to see it. Then you have your break of structure. So here you have your inducement. You can call it IDM, you can use the dollar sign, whatever sign. Here you have your BOS. So if you enjoyed this video, do well to subscribe to this channel. And also you can join my Telegram community. The link is in the description below. There are going to be some times where your analysis might be okay, your strategy might be okay, because that has been the same strategy you have been using to take good trades, and even sometimes an entire week of TP back to back. But there are going to be some times whereby in a month you are going to be losing consistently. Now when that time comes, it's not necessarily because your analysis has changed or you are no longer putting in the time and effort. It's just like every other business. There are going to be some time whereby your level of perseverance, your level of consistency, and your level of determination needs to be tested. So the market is going to test and see how tough you are. So if you are just able to stay there, and maybe during that time you can also improve the time you spend with the market. So if you are spending 2 hours, you can improve it. That time you can spend 4 hours in the analysis every single day, just to improve on your skill and to make sure that you stay consistent long enough to pass that losing streak. So more importantly, just know that it's going to take you some time, not really that long, because there are some factors that will allow you to become profitable trader a lot more faster than other traders. That does not necessarily mean that you are better than them in terms of analysis or in terms of psychology. It's just some factors that were in your advantage but were in their disadvantage. So always remember that the best time to plant a tree may have been 5 years ago, but the second best time to start is today.